How to build a proven trading system. From backtesting to forward testing. A reliable trading system is key to consistent success in Forex, stocks, and other financial markets. Building a proven system requires a structured approach, from strategy design to live validation through backtesting and forward testing. 1. Step 1. Define your trading strategy. Before you test anything, clearly define market, Forex, stocks, commodities, etc. Time frame, scalping, minutes, swing trading, days, or investing, months. Entry but exit rules, when to open and close trades. Risk management, lot size, stop loss, and take profit rules. Example, buy EUR/USD if the 50-day moving average crosses above the 200-day moving average. Set stop loss 50 pips below entry. Step 2. Backtesting. Backtesting involves applying your strategy to historical data to see how it would have performed. Use platforms like MetaTrader, TradingView, or NinjaTrader. Key metrics to evaluate: O win rate, percentage of winning trades; O risk-reward ratio, average reward compared to risk per trade; O drawdowns, maximum decline from peak equity; O net profit, total earnings after losses. Tip: be careful of overfitting, where a strategy works perfectly on past data but fails live because it's too customized to history. Step 3. Forward testing, paper trading. Forward testing, also called paper trading, means testing your system in live market conditions without real money. Run the strategy in real time using demo accounts. Stick to original rules strictly. No adjustments during trades. Track performance for several weeks or months. This phase reveals how your strategy handles real market dynamics like slippage, spread widening, and unexpected news events. Step 4. Go live with caution. After successful backtesting and forward testing, start small with real capital. Monitor performance closely. Be prepared to tweak risk management, but not the core strategy impulsively. Conclusion: building a proven trading system takes discipline, patience, and methodical testing. By carefully moving from backtesting to forward testing, you can validate your ideas, minimize surprises, and set a solid foundation for trading success.